Good morning, Armor Insiders. Welcome to the morning meeting of our virtual hedge fund. You're the portfolio manager on the desk, so take the information I share and any other information you're putting together, figure out your strategy, and then execute it. You're the risk manager of your own assets, right? So, very simple, very brief morning meeting. We're in the grind higher phase of the stock market. In the first month or so of a new rally, a new bull market, whatever you want to call it, you'll have these ripping days where the market skyrockets, right? And then what happens is it just starts to grind higher. The market, as IBD shares with us today, is extended from its 50-day moving average, the S&P and the Nasdaq. So I'm looking at right here at the equally weighted. So the equally weighted is not extended. It's totally reasonable within the range of its 200-day moving average. And there's a lot of upside left in the whole broad market. When you look at the Nasdaq 100, all right, it's a little bit extended from the 50. Not a lot, but what they're saying here is when it gets this extended, it usually has a consolidation phase. Sometimes it pulls back to the 50. Sometimes it just consolidates like it did in here, okay? Same thing is true for the S&P weighted index. The distance to the 50, which is the black line, is a little bit stretched, like in here, and then it consolidates, made a little cup and handle, then it ran again, gets here, and then it has to come down and test the 50. So I think the point of that message from IBD is just to remember that, we had a huge rip off the low, and what we're going to probably need to see is some, hackneyed, I'll use the hackneyed phrase, backing and filling. Either you get a correction in time or price. I personally think it'll be time. I think the market will grind sideways to higher as the 50-day moving average catches up to it. And then we see the market go out near its highs at the end of the year. But when it comes to day trading, the indexes, we've entered the type of grinding higher market where the best trades are going to be after Crazy Ivans. The Armor Crazy Ivan is a reference to the movie Hunt for Red October. And in that movie, the sub captain for the Russian sub has a tendency to every hour just turn around and do a 360 to see if there's anybody behind him before he continues on in the direction he's going. And that's the way I describe these hour-long sell-offs in the market for no apparent reason. They're swift. They can be violent. It brings the Chicken Littles out for an hour. Oh my God, the market stopped, right? Then the market turns around and just grinds higher again. That's the type of market we're in. So we follow the Armor playbook for day trading. We'll certainly execute whatever we see. But the real key here is to trust the armrATR indicator, the average true range indicator. When it starts to stair step higher during the day, you can get that hour-long sell-off at any time. But if the ATR low of the day is stair stepping higher, it tells you the market statistically is going to try to grind higher. That's what it's telling you. So in risk monitor red environments where the market's selling off, you'll get the ATR high of the day start to stair step down. And that's telling us, and we made a lot of money on this, that there's just tremendous pressure on the downside. And so what we were doing is flip trading. We would get short. We made money short in the risk monitor red doing that. It's the opposite in risk monitor green. The market will rally a little bit, so you'll get that movement higher, and I'll show you what it looks like yesterday as an example. And yesterday there was no real money made day trading, but I just wanted to show you this because there was a trade late in the day if you wanted to take it. Okay, that's this little trade off of the opening range low and it went to the opening range high. This was a chop day. But the reason that trade worked right here, and then of course it sold off again because it was a chop day. There's a little trade there. But what I want to show you here is this stair step higher here and here in the ATR. That tells you the market wants to try to grind higher. And so buying weakness, sell-offs down to support, and looking for the reverse is the best trade of the day. Okay. So we want to stay on those opportunities whenever we see them in this market environment. Here's a more obvious example here in the Nasdaq. Stair step higher, stair step higher, stair step higher. Okay. Then the market sold off, but you had the Nasdaq rally up to the second Fibonacci up on the day from the opening range. So there was a trade there in the Nasdaq in the morning, okay, before it gave way and closed, somewhere around the VWAP, which is the black dots. So I just wanted to go over that with you a little bit. I'll be looking for that trade. I'll be looking for that trade. Looking to really get on weakness after the market sells off for an hour. That's probably the bread and butter trade here as the market grinds higher. The highlighted picture of the day. Here's the S&P. Here's the equally weighted S&P. I'm looking at getting on small caps, which are way behind. And if they break out of that pennant, I'm going to be long small caps in my portfolio. So somebody's asking me, a lot of people asking me, is there any room left for the market to go up? It's blah, blah, blah. Okay. It's already rallied and all that. Okay. There's a lot of power to buy the market left. First of all, you can see the equally weighted indexes are not extended. All right. So there's a lot of room left. But I wanted to share this chart with you. So I thought it was really compelling about hedge fund exposure. So the market's doing this. This is the stock market, right? Which is clear cup and handle in the midst of a breakout. And yet hedge fund exposure is down here. It's so, the hedge funds are so underexposed to this market rally. It's actually shocking. And so there's, two ways to look at it. The Chicken Little will say, oh, they know something. Hedge funds know something, and the market's going to go down. Totally incorrect, in my opinion. Hedge funds, as a rule, are momentum hungry, performance fee based money managers. And when they're dramatically underperforming the market, they better catch up in a hurry. That chart right there, if professionals who get paid performance fees are significantly underinvested, I can only imagine what the rest of the investing public has done with this rally. Most people totally missed it. This is why there'll be sell-offs met with buying support as people try to catch up, and particularly hedge funds who are trying to get back in line with the market and outperform so they can get a performance fee. They're getting smoked right now. So if guys who get paid a performance fee are this far behind, where's the rest of the investing public? I think people are really behind this market. Most people have completely missed it. Nobody believes it. And that is just the makings of a wonderful rally. I think it'll last to the end of the year, and I think it spills over into Q1 of next year, which usually happens. When you get a Q4 rally that extends, boom, Q1 ends up being pretty good. So we have this window of time, I think, another 3-4 months, something like that. And we've got to maximize our success when we get the opportunities. So where would I go with capital? We're just managing success on the in the portfolio here. So I booked a little bit of profit on MicroStrategy yesterday. I'm certainly trading this thing, so I'll get back into it when I see the next opportunity. I've focused most of my crypto buying power here on Coinbase, which is just skyrocketing. So that's where I have most of, really my only crypto exposure. I have a pretty good position size on of over 10% of the ARMR Special Situations Fund is invested in Coinbase. So pretty large exposure there. I had a little rant yesterday on precious metals. So crypto, precious metals, spot physical gold is breaking out. We have our maximum position size on there. We're trading that well. I told you yesterday that if silver closed strong, I would put on the silver position. I did that yesterday. Had to do it. There's silver. breaking out of this huge base here. I mean, it hasn't even started yet, and I'd like to see it get to the end of the week and have it break out. It hasn't even started yet. It's so early in silver, and it may not start. This could be a one-up day, and then it breaks down again. So we'll just use the low of Friday as our stop, and we'll see where it goes from here. Silver Fox makes a good point that this is typically the time of the month where gold and silver go down. So for them to be up at all right now is, wildly bullish. The end of the month when you get the futures rolling, usually you get pressure on the metals. So for them to be up is another piece to the puzzle of strength there. I ranted yesterday morning. I have no interest in mining stocks. I don't know. I might, if we get a strong weekly close in the metals. If I put any money in miners, it's going to be GDX. I mean, look at that chart. I don't know if I can avoid doing that. It's just a wonderful pattern right there. Yesterday was lock and load, so it takes out the high of yesterday, and I should be long. And, I'll probably use Nugget to do it. Give myself a 2x exposure. Pretty sure it's 2x, not 3. Why it says that here. Yeah, 200%. Yeah, 2x. So I'll probably use Nugget to do it. I'll get all the upside of the mining group without having to choose individual stocks. I have no interest in trying to guess which stocks will outperform. I want the index. I'll go with twice the index. I'll get all the performance with no individual stock risk. That's where I'll go. So I may find room in the portfolio for that. So what's at the top of my list today? I'm not sure I'll be trading Nugget today, but by the end of the week, if metals break out, maybe I'll be there. If you're an aggressive trader, you would be on Nugget today. So I don't know. I might find some room in the portfolio for that if we take out the highs of yesterday, because that would be the risk on entry. We are having a real nice run here. So let's go over stocks to watch. Top stocks to watch. Top stocks possibly to invest in. I've focused a majority of my capital on the indexes. Then I've taken that piece in the special situations fund, and I've put some capital into the groups and themes that I think are most explosive, with the companies with the most explosive earnings and revenue coming through. So defense is a theme I want to be a part of. We have AVAV, which is blowing out of a huge base. We're long Kratos, which is a nice steady uptrend and rallying in here. We're long Palantir. These are our 3 defense stocks. I want to throw the hat in the ring here and say I'm going to be doing research on this today. That stock, Carpenter Tech, looks unbelievable, and they make the I'll read it for you. It's a metallurgical company. They manufacture and distribute specialty metals: cobalt, nickel, titanium, chromium, and iron scrap. But really what they're doing is all of the aerospace and defense products. So the ordnance, things that are being fired, all that kind of stuff. All those products that they require this material to be made. So that's another layer of investing in defense. And when I look at this weekly chart of Carpenter Tech, it makes me really interested. I mean, it's coming out of a huge base. And then you go to the daily chart and you can see that it's got this nice pennant right here, and it's just broke out yesterday on rising volume. And you have some blowout earnings numbers and revenue ramping. So this is an interesting story I might be adding to the portfolio. Zscaler announced earnings. Stock is down, ran up into the number. Stock is selling off on the news, and every analyst is upgrading it. So my guess is the stock's not going that much lower in here. And if you look at Palo Alto, Palo Alto's in the process of breaking out. Don't forget that stock dropped about 5% on earnings and immediately found support and reversed. So cybersecurity is looking pretty compelling to me. There's the weekly chart of Palo Alto. And then, of course, we're going to get the earnings announcement of CrowdStrike, which I'm real interested in. When's that coming out? That's today. Stock ran up into earnings. I'm not buying it in front of earnings, but any weakness could be compelling. Okay. And the last thing on the docket, what else did I want to show? Oh, yeah, don't forget Seadrill. Seadrill, so you can see Seadrill is the bottom of this trend here. So if you're ever going to buy an energy stock, you're going to buy it down here at the bottom of the trend and sell it at the top, right? It's a pretty obvious pattern right there in Seadrill, and it looks like the stock is up on the earnings number. So this is kind of the channel that the stock is in. And just like it was a buy down here at the bottom of the channel, it's probably going to be a buy again when it breaks the downtrend, which it's doing right now. Broke the downtrend in front of earnings. Now it's going to be up here as it gaps up on the earnings news. So that looks pretty good. I don't like energy. I don't know what the problem is with energy. It just looks terrible. But if it's able to find, we could get rid of these green arrows. I think just never broke out, right? So I don't know if energy can find its footing at some point. I might have an interest in energy again. It just doesn't look very good right here, but trying to hold the 200-day moving average. So if there's ever a time to buy energy, it's after selling. So we'll keep our eye on energy just in case we want to add that to our exposure. All right. So that's our morning meeting this morning. I look forward to working with all of you at 9:30. We'll get the live trading desk going. We'll get to trade the triple indexes, S&P, and you guys can trade the Qs. I like to trade the S&P. Looking to add a position in small caps. I want to get a day trade right on small caps, have them be up big at the end of the day, hold it for a swing trading position. I'm looking at GDX and really Nugget to see if I want to add any exposure in the mining stocks if they take out the high yesterday. And we'll be doing some research on Carpenter as the kind of my main focus this morning. And so we'll just keep managing success. All right. Thanks for joining. Look forward to working with all of you. Everybody have a great trading session. And remember to be the smart money. You can do it. Just execute your plan and be the smart money. Have a great day, guys.